let's move on now and let's address some earnings. We've got Sudipta Roy, CEO at L&T Finance, waiting by. Sudipta, great to have you on ET now. You've guided to grow at a 20% CAGR through FY 2031. You're currently growing at 27%. Should investors now upgrade their FY 27 book growth estimates toward 25% plus, or should we expect to grow at a more moderate materially over the next 3 quarters?
I think it's a very pertinent question on growth. Over the Lakshya 2031 period, we have guided for a 20% CAGR growth across 5 years. It is right that we have grown at almost 27% this quarter. And one of the things we would like to make very clear is that if there is risk-calibrated growth available in the market, then we are not bound by that 20% number. However, over a period of 5 years, we are committed to that 20% growth number, because the fact is business does not move in straight lines. There are ups and downs in businesses. There are certain times risk-calibrated growth available in certain business lines. There are times, you have to tighten because the risk environment is not proper, right? So what we want to make it very clear is that there is risk. If there is risk-calibrated growth opportunity available in the market, we will not shy away from taking it. However, overall, our guidance for the Lakshya sort of 2031 period across 5 years is 20% CAGR, and we remain committed to that. If the market conditions remain benign over a larger part of this 5 years, then yes, we might see a growth rate which is higher than 20%. But because 5 years is a long term to sort of time to predict, with certainty sitting at this particular point in time, our guidance is on 20% CAGR. However, if conditions exist which are favorable, we will grow at 20% plus.
And your overall disbursements were down, 1% sequential, Mr. Roy. Rural business finance disbursements declined 3%. Gold finance was down as well. Both rural and gold were identified by you in April as important from an FY27 growth engine perspective. Is this simply seasonality? What's playing out? Could you give us a sense?
I think Q4 is typically the high quarter of BFSI, wherein all the engines start fire, and you typically have a very good outcome in terms of disbursements. Q1 traditionally is a weaker quarter for BFSI. However, as you can see, many of our business lines have grown well. The rural business finance vertical obviously saw a little bit of sluggishness in the month of June, primarily because of the delay in monsoons, because typically June and July for microfinance business are large months. And because the monsoon was a little bit delayed, about 3 weeks delayed, some of the offtake was a little bit moderated in the month of June. The gold loans business actually went through a little bit of adjustment phase post the implementation of the RBI guidelines, the new RBI guidelines from 1st of April. And obviously that saw a little bit of slowdown in disbursements, because we wanted to be very, very careful and make sure that everything that we do right in our gold loan branches are exactly according to the RBI guidelines. That led to a little bit of tempering of growth in the month of April, but it has picked up in the month of May and June. And we believe that Q2 of FY27 will be business as usual for gold loans. We continue to deploy our gold loan branches at a good pace. And we are committed to deploying about 500 new gold loan branches this year. However, just also because of the West Asia war, we have pruned just out of more prudent cautiousness. We have pruned a little bit of our disbursements on the margin, especially on the riskier margin on our personal loans business, our loan against property disbursement, as well as our SME disbursements. Actually, we could have grown faster during this period, but we consciously chose to shave off about 1,000 to 1,200 crores of our disbursement in the businesses that I mentioned before, just to make sure that our risk metrics remain stable. And as we have already and always articulated that we are a risk first and a tech first retail financier of choice, so we will never trade growth for risk. So obviously, our overall Q1 calibration of disbursement has been risk calibrated, and we have taken opportunities where growth was available, and we have been sort of cautious where we felt that there might be downward risks later on.
Right. And since you did mention about rainfall deficit, given your 50% exposure to the rural portfolios, are you seeing early warning sign systems showing any deterioration in collections, bounce rates, or stage 2 formation?
No, as of now, we do not see any significant sort of accumulation or risk in any of our lines of business on account of El Nino. Let me say that, though monsoon has had a delayed start, we have had decent amount